Research, Bank of America. Rahul, thank you so much for giving your time to ET Now. It's a pleasure talking to you this morning. As we clearly see that on the global front, there's a lot happening. But at the same time, the Indian macros and fundamentals have remained quite resilient despite the global volatility. Now, also in the global front, it's not the tariff announcement which is hurting the sentiment of the market, but the uncertainty is playing more. How do you read the markets at present?
Absolute pleasure to be here as well. I would say at this point in time, the way we are looking at it is that the domestic triggers, as far as the macro is concerned, is actually looking quite okay, right? I mean, we have had a pretty good monsoon. We have had a reasonable amount of fiscal support, monetary support. There's been some visible improvement in activity indicators, especially in the FMCG side as well. But the global uncertainty, is largely from the residual impact of the tariff side, right? Which, by and large, I would say is going to stay with us till the time it goes away, but it's starting to, and it will show up in the numbers sometime end of September onwards when, they really get baked in. But then when we look at, the broader global backdrop, right, one where the level of uncertainty on growth, which was there, say, back when Liberation Day came in, that is not there at this point. So, we are still seeing a lot of the externally faced sectors still doing relatively okay as far as the momentum is concerned. But I think the fear of a slowdown is going to stay with us, and its impact on capex spending, on business planning, is likely to be a little bit longer than what, ideally would have been the case.
All right. Hi, Rahul. Morning. This is Shrishti also joining in. With Rahul, with respect to some of the macro data, we will be having our eyes on the IIP numbers. Help us understand what is your expectation from the IIP July numbers, given that the 50% US tariff that has been slapped on India. But a lot of these pre-buyings, or rather front-loading, also happened, is what our industry experts have been telling. Give us your sense, how is that expected to impact the IIP number? And on the number front, what's your hope?
Yeah, so for July itself, I think July was a bit of a washout month, literally, especially with the way monsoons were playing out. We have seen several supply-side indicators, whether it is, say, power consumption, coal mining activity, which was visible in the core IP index, which comes out, say, a week before. That was on the weaker side. But then, even on the manufacturing front, the numbers were sort of fairly tepid. So we are looking at a print of around 2% for the July IP. And the impact of the tariffs are likely to be felt more in the August month, right? Because it was only end of July that President Trump started tweeting, and as a result of which its impact on production from a front-loading standpoint, and then the inventory correction effect that probably shows up in both August and September is going to be felt more in the next month's data that comes out. So we are not looking for a particularly strong print, but that's mainly because of domestic supply factors. Essentially, we think that this is still going to be good for rural incomes, so it has to be underplayed. But certainly, the data is not going to look particularly cheerful today.
The data might not be cheerful, but then the impact more will be seen in the August data and economic indicative action, the industrial production index data, which it will come. Having said so, Rahul, one more thing. Under a downside scenario, we should consider all the scenarios, considering the volatile movements in the markets at present. Now, you see the tariff jitters plus the weak rural demand. What is a realistic July IIP floor according to you, and which subsectors would hit the first?
Yeah, so I would expect there to be some improvement in the labor-intensive areas, especially in line with the FMCG demand pickup that we saw in the first quarter of this fiscal year. You might see a little bit more weakness in the capital-intensive, say, auto sector, etc., where we have the high-frequency numbers already, which will be a little bit on the weaker side. But then when it comes to domestic non-tradables, like, say, construction-related sectors, electronics, they probably will show a little bit more improvement at the margin, given the consumer cycle that's been, kind of playing out slowly but steadily. So I think it will not be all lost, but, you probably still see the dominance of supply-side weakness sort of overshadowing some green shoots of demand recovery.
All right, but along with that, Rahul, with low inflation for July at 1.6%, will it support the domestic demand and does cushion the IIP in July, especially the consumer durables and non-durables?
Yeah, so the drag from inflation, I think, has been reducing for quite some time. And obviously if people are spending less money on food, then naturally there's greater room for discretionary spending as well. And this is showing up in several survey data and sentiment numbers as well. I think this probably sets us up for a fairly strong festive season, essentially with a combination of the GST tax cuts, etc. So you might see a little bit more of an impact again in a backloaded manner. But essentially, I think for the month of July, there are signs of sentiment improvement, but not enough signs of activity pickup. But I think there could be a convergence between the two in the next 2 or 3 months, notwithstanding the tariff headwinds.
Rahul, one more thing. If we try and understand the change in density now, there has been a divergence in particular sectors. Let's say the fertilizer and the steel are up and the coal crude are down. Now, are core sector divergences like this likely to change headline IIP momentum in upcoming periods, according to you?
So I think this is something we have been seeing for some time now, where within the subsectors of the core IIP, the domestic focused areas, particularly around steel, cement, they have been doing very well. And there's been some weakness around the more export-oriented areas like refining, etc. My general sense is that, with the improvement in, rural incomes expected in the next 2 to 3 quarters, you probably will see a little bit more improvement as far as the labor-intensive part of the curve is concerned. We may see the capital-intensive side perhaps being a little bit on the weaker side, but that's just a normal, we see this juxtaposition play out every 1 to 2 years.
All right, Rahul, with this, we let you go on that. Thank you so much for taking the time out and speaking with us and helping us understand what's really at play when it comes to the state of economy. But with this, viewers, it's now time once again to slip into a very short break. Don't go anywhere. The market action continues on ET Now, and even the recovery on the market is also continuing right now. But we'll track all of that after this quick break.